Hi, Mike Flores here, co-founder of Trade Prosper. Welcome to Section 7, Video 4. This is the ADX turn. Now, we introduced the ADX to you earlier to show you how to screen your entries for the channel breakout. Now, I'm going to show you how to use the ADX to help you know when to exit the market. Now, this is another technique that's used to help us make sure we capture most of the move, but then we get out before the move's over. So you'll see here on the ADX section, let me just make it a little wider. In the ADX section, we have this blue horizontal line, which is the 40 line. And that's a standard line that you'll see whenever you open up the indicator. On most charting platforms, you'll see it there. I've seen it on 4 or 5 of them, so it's pretty standard. So now let's look at this trade. So we have a channel breakout trade here, right? I'm going to pull the chart down a little bit. We had the 55-day high, we have the 20-day high, we have the 55-day low, and the 20-day low. Now, the first thing we notice is we're looking for a channel breakout setup. So the price action is near the downside, so we're going to have most likely a downside breakout. Looking here, we would see that we have our sideways setup. We have more than 1 week of trading above the horizontal line. So we have 1, 2, 3, 4, 5, 6, 7, 8. 8 days, and all we need is 1 week, which is 5 days. So here we see the ADX has gone blue on this day. So you place your order, but nothing would happen. Then you move on to the next day, place your order, nothing happens. Here you place your order to sell. Now we have some action. The ADX is rising and it's blue. We have the sideways setup, and the next day the market breaks. Remember, this is crude oil futures, so this is a futures contract, so we're going to use the last bar. This was the projected last bar stop. On the day of the breakout, we adjust the stop to this high, plus the cushion. The market trades lower, and it goes lower and lower. And notice how the ADX is rising during that time. That's because the strength of the trend is increasing. Remember, the ADX tells you the strength of the trend, not the direction. So you see that it starts increasing. Now, here comes the rule. Any time that the ADX goes above 40 and the next day it closes down by any amount, you exit market on close. It's that simple. So I'll say it again. Any day that the ADX goes above 40 and you're in a trade, so we're in this trade, we're short, and the ADX goes above 40, any day that the ADX goes down by any amount, you exit that trade, market on close. So in this example, we would have been short all of this. Using the projected last bar, we would have adjusted the stop again here because we had a new sideways setup. 1, 2, 3, 4, 5, 6. It broke down. So this would be our new sideways. This would be our new last bar stop. Same thing here. We have 1, 2, 3, 4, 5. It breaks down. That would be our new stop. And then notice here the ADX goes from blue on this day at 47.22189. If you look to the left of the cursor, the next day the ADX goes down to 46.26. So what we do at the end of this day is we exit market on close and we get out of this trade at 87.72. We got into this trade at 95.25. That's big money in oil futures. Remember, one contract of crude controls 10,000 barrels. All right, so as we see what happens here, we would have exited market on close. Now we see that the ADX continues to go down, but now look what happens. In a couple days later, the market rallies the other way, and we would have been stopped out anyway, and it continues to go higher. So what the ADX does is it helps us get out of the market as soon as the trend is over. So this downtrend that got us into this market was over, and the ADX told us time to get out on this day. So that's how the ADX turn works. It's a very, very helpful indicator that we're going to use, and we're going to use it for anything that we trade: futures, forex, CFDs, stocks, ETFs. It doesn't matter what we trade. Now remember what I said, that rarely do we ever see the ADX get above 60, and we see here it got up to about 47 and then it came down. Okay, now let's take a look at the ADX turn in the currency pairs. So it works the same way. We see here we have a 55-day high, we have a sideways setup, and then we see on this day we have a blue rising ADX. So we look to put it in order on this day to buy on a break of the 55-day high, and our stop would be the low of that day, right? Because we use the last bar for foreign exchange. Our projected last bar would be the low of this day. Now the next day we break out higher, so we adjust our stop to this actual low to make it the actual last bar, the bar of the breakout. Notice the ADX below is still rising as the trend moves higher. Now we have another sideways setup. The market breaks higher, so we adjust our stop from here to here. Notice again the market keeps moving higher and the trend gets stronger because the ADX continues to rise. Now notice on this day the market gets weak, but the ADX is still blue. The next day the market goes down, makes new lows, but closes higher than the previous day's close. This close is higher than the previous day's close. However, the ADX turned red. So market on close, we would exit this trade. Now, we got long the euro versus the dollar around 133.43, which is the close price of that day. If you look to the left of the arrow, the cursor, you see the close says 1.3343. So we got long around that level, and we would have exited at 1.3583 around that level. That's a nice chunk right there. A nice chunk that we made in that month and a half, or a little less than a month, that we made in euro dollar. All right, let's take a look at a stock chart. Okay, what I have here is an example of a stock, Barrick Gold Corp, ticker ABX. And what you'll see here is we have a sideways setup, 1, 2, 3, 4, 5. On this fifth day, you can see below that the ADX is blue and rising. So we place an order to sell on that day with the cushion, and the next day we get short ticker ABX on a 55-day low channel breakout. Remember, for stocks and ETFs, your stop is the 20-day high. So your stop is all the way up here. And every day you're going to change your stop as it changes. You're going to change your stop as the 20-day line changes. So the stop stays the same all these days. Then it changes here, it changes there, it changes there, and so on and so forth. Notice that the ADX, though, is not above 40 yet. It's there. The market's going sideways. There's no trend happening, but you're still in the trade because you're not stopped out. It doesn't go through your stop loss. Now the market picks up some momentum to the downside. We start breaking lower. So you're adjusting your stop as the 20-day high moves lower. You're still short the market. The market now starts taking a big leap lower, and you can see the trend is strengthening as that happens. Notice we break above the 40 line, and we continue to go higher. Now on this day, we see that the market breaks a little bit higher, but at the end of the day, the ADX is still blue. The next day, the ADX turns red, which means it turns down. So on this day, you would exit market on close. Now, if you left your normal stop is all the way up there. Now you're out of the market, and now you're waiting for another entry, whether it be to the downside or the upside. You're waiting for a new sideways setup. You're waiting for the ADX to start rising again before you place your next trade. So you're out of the market here, and you made a really nice amount of cash because you sold up in the 30 area, up here, 29.33, and then you exited at 19.06, which is nice cash on this one trade. So that's how you use the ADX turn to decide when to get out of the market. So now, so far, I've shown you the projected last bar and the last bar for the futures, Forex, and CFDs. I showed you the 20-day low for the stocks, and now I've showed you the ADX turn, which we'll use for anything that we trade. Anytime the market goes above 40 and turns down by any amount and closes down, we exit market on close. All right, see you guys in the next video. Thanks.